Hi, I'm Pat-Keon, a research analyst here with Lipper, and I'm here to speak to you about fund flows for the week ending Wednesday, April 23rd. Overall, we saw positive net inflows of $10.7 billion on the week. The Dow was up 0.5% for the week in what was a shortened trading period, only 4 sessions due to the market being closed for the Good Friday holiday. In economic news, we saw single-family new home sales plunge 14.5% for March. This is well below the expectations, which were expected to come in at a seasonally adjusted rate of about 450,000, and the actual data put them at 384,000. In months past, this stat, weak numbers for this stat was blamed on the harsh winter we were facing. But this could not be blamed in March. Instead, analysts are now pointing to possibly sticker shock for this plunge in data. Median housing prices were up 11.2% in March, which was a single-month record for our largest increase. Let's move on to our macro groups now. Take a closer look at them. Equity funds were up $3.1 billion on the week, their 17th straight week of inflows. Taxable bond funds were up $2 billion, their 16th straight week of inflows. Muni funds up $226 million, their 3rd consecutive week of positive flows, while money markets were also up $4.9 billion, which broke a streak of 7 straight negative flows for them. Let's take a closer look at our equity fund category now. As stated before, they took in $3.1 billion on the week, their 17th straight week of positive flows. Taking a closer look at the categories, we saw that the non-domestic equity funds took in the bulk of this money, with $2.1 billion out of $3.1 billion. Now let's take a closer look at our equity ETF category. Equity ETFs had outflows of $471 million. This is their 2nd straight week of outflows. ETFs which saw investors selling them were PowerShares QQQ, down $880 million on the week. PowerShares QQQ has seen a fair amount of money flow out of it over the past 8 weeks. Taking a close look at the data, we saw $4.8 billion has left their coffers over the last 8 weeks, which has driven their TNA down to just over $40 billion, which is down approximately 14% from the start of the 8-week period. Also seeing money leave their coffers was IWM, iShares Russell 2000 ETF, which had about $840 million leave. On the buy side, investors were putting money into XLE, the Energy Select Sector Spider ETF, which had about $860 million go into it. Let's move over to our taxable bond fund category now. Taxable bond funds had about $2 billion go into it last week. As we said before, that's 16th consecutive week of positive flows. Taking a close look at the data, we see that the short, intermediate, investment-grade debt category took in the largest share among the Lipper categories, with about $500 million of positive flows there. Let's move over to our taxable bond ETF category now, which had positive net flows of $844 million on the week. Its 2nd consecutive week of positive inflows. Investors were buying the AGG, iShares Core Total U.S. Bond Market ETF, took in about $240 million, while the iShares 20-year Treasury Bond ETF, TLT, took in about $210 million. Let's switch over to our muni fund category now. Munis took in $226 million on the week, its 3rd straight week of inflows. Our national muni classifications accounted for all the positive inflows, taking in $226 million. Now we're going to move over to our last category, our money market funds. As stated previously, they turned things around this week, having positive net flows of almost $5 billion after 7 straight weeks of outflows. Contributing mostly to this, or contributing all the net flows to this, was the taxable money markets, which took in $9.2 billion, while tax-exempt money markets saw $4.3 billion leave their coffers. Well, that'll do it for this week's report. If you'd like to take a deeper dive on the data, please go to our website at www.lipperusfunds.com. And please join us again here next week, where we'll be talking about more fund flow information.